What is up, everybody? Welcome back to another episode of Bitcoin and Markets. It is Monday, Bitcoin Fundamentals Day. We're going to go through the Bitcoin Fundamentals report that I put out on bitcoinandmarkets.com. Big day for price, probably big day for flows. I have not seen any of today's numbers, but the last few days, Thursday, Friday, and probably today have all been very positive flows. So we're going to take a look at as much as we can, go through the headlines, some macro headlines. We have CPI coming out tomorrow, so we'll take a preview of that. Talk about price, talk about mining, and a little bit of a layer 2 story. So that is what's going on today. Let me get everything in order here. I'm going to share my screen with Telegram. I'm live streaming on YouTube, Rumble, and Telegram. So there we go, guys. And make that big for you. And then I'm going to actually go in to the back end, and I have to update the thumbnail on YouTube. So 1 second, sorry about this. That's how it goes. Upload thumbnail. I'm excited to go over the chart. If you guys are new to my content here, I am an economist by trade with a background in military and, of course, Bitcoin for going on 12 years now, I think. Let me think back. Yeah, it's going on 12 years or so that I've been involved with Bitcoin, and I've been a content producer here since 2016 with the podcast Bitcoin and Markets. And now I have YouTube, Rumble, Telegram, all of that. Okay, so let's share the screen, and I have to make this small and share the screen. And I probably, do I not have it pulled up? Where are you? Where are you? Where are you? Let me just pull it up again. Sorry about this. It's been a crazy day today. I thought I could go live earlier after like at 3:30 Eastern, but I had to take my kids to softball, so did not do that. Okay, here we go. Let's see. Now let's share. Bam. Finally, bitcoinandmarkets.com. This is where you can go to sign up to become a free member, get this free newsletter every week. You can also become a paid member. You get to get my blog posts when they come out periodically. You get them early before they hit for public viewing. You can also enter the price forecast competition. So here is February's price forecast competition. Just at the beginning of every month. Oh, I forgot to update this. We go through and we make a prediction for what the price is going to be at the end of the month, and the closest person wins $20 in sats over the Lightning Network. So that's kind of a fun perk. All right, let's jump into the fundamentals report. Always start off with a meme. This one was blowing up the timeline this morning with Jack Dorsey wearing his Satoshi shirt. I also saw a Google Trends thing for the term Satoshi, and it's like 0, and then just yesterday with the Super Bowl appearance here, it went like, straight up. So that's good. Obviously good marketing for Bitcoin. Of course, Bitcoin is having tons of good marketing right now, but that is that. Okay, let's get into a snapshot of Bitcoin. Let me zoom in. I always start with this table up top so you guys can get a quick bird's eye view of what's going on in all sorts of places in Bitcoin. Weekly trend is positive inflows. Media sentiment is neutral still. There's a little bit of FUDing going on and stuff like that, but it is neutral. Network traffic is moderate. We'll take a look at the mempool, fees, and everything down below. Mining industry is surging, and days until halving. I didn't update that. Oh my gosh. This is a one-man show, so I try to get everything updated as well as possible, but I miss a lot of things. 64 days until the halving, so that 72 is wrong. Okay, price at the time of writing was 49,904. in the last week, that's plus 7,000 or 16%, and it's gone up even more. Let's jump right into the charts because I know that's what a lot of people are interested in because price is the only thing that matters. But okay, 50,202 right now, still going up. Huge green day today. Let's go to the weekly and just look at the beauty of these candles. Last week, that was a monster candle, and we're getting off to a huge start already this week. Okay, so that is the live price chart. Let's get back into the report, and I'm going to maximize this. Sorry, guys. All right. Market cap is creeping up to $1 trillion. It might be at $1 trillion right now since the time of writing, and let me look that up as well. Sorry. We are at 986 billion, so not quite at that $1 trillion mark yet, but we need to get used to speaking about Bitcoin in trillions. Satoshis at the time of writing, or dollars, Satoshis per dollar at the time of writing was 2003. Now that is under 2,000. Finnies, that's 1/10,000th of a Bitcoin. That's my denomination, right in the middle of the decimal places. That's at $5. Mining sector, previous difficulty adjustment was plus 7%. The next one is in approximately 2 days, and it's estimated to be plus 9%. The network is just going nuts, okay? Even though fees are dropping off, because inscriptions are dropping off, the hash rate is just going bananas right now. Mempool 206, that's down a lot over the last several weeks. The highest I saw was like 550 megabytes or so, and now so it's less than half of that. Fees for the next block at the time of writing, $7.68 or 110 sats per virtual byte. This is very variable. Sometimes during the day, you probably see it as low as $2 today. Sometimes maybe it gets up this high or maybe even $10, depending on the time of day. I know Bitcoin fees used to have somewhat of a heartbeat. They would be higher Mondays and Fridays, or higher during the work week, and then they would fall off on the weekends. I think probably because of banking hours, the banking hours when people could actually get dollars out of their bank, transfer them to the exchange, etc. Those were the high times for transactions and higher fees. Then when we had inscriptions, that kind of equalized the weekends because the inscriptions took advantage of the lower volume weekends. So that kind of made it steady. But there's probably times during the day as well, like first thing in the morning Eastern time in the United States, maybe different times like in Asia or whatever. There's going to be certain times during the day that those fees go higher. So that's that. Okay, low priority fee at the time was $3.50. So that's a pretty big difference there, less than half. Lightning Network, I did change my source for this. I was using mempool.space. Now I'm using ml.com. You guys can check that one out. But big downward movements on both the capacity and the channels. 187 Bitcoins came off the Lightning Network, and channels over 1,000, almost 2,000 channels closed. Lightning Network is really, really struggling. Okay, so that's the snapshot. In case you missed it, this is all my content that I've been putting out. My premium newsletter on bitcoinandmarkets.com. This is the latest post. Is the crescendo peaking for now? And I'm talking about not necessarily about Bitcoin in that crescendo, but the kind of crescendo of everything happening from macro to interest rates to inflation, just the whole gamut of the economic environment right now. Is it crescendoing, and are we going into some sort of recession imminently? But take a look at that post that came out on Friday, I believe. Okay, community streams. I did get a episode out on the podcast feed, so keeping that somewhat fresh. I try to put out as many as I can, but blog posts, nothing new for this week. Bitcoin Magazine Pro, I did write one for them. Bitcoin flows fuel breakout as recession process continues. And of course, a market and a mining dashboard. You guys can check out bmpro.substack.com. I think we're going to have some big stuff going on over there. We're talking about expanding a little bit of the content offerings that we have with Bitcoin Magazine Pro. So check that out. And of course, I will announce it when that stuff comes down. Okay, first main section is headlines. Price is all that matters. Bitcoin breaks 50,000. I've been saying this for about 10 years now. If price were to constantly go down or even sideways forever, there's very little reason to hold Bitcoin. Development or to develop on Bitcoin. Back an economy with Bitcoin. Bitcoin's technology is number go up. Right now, we are experiencing the power of this tech, a positive feedback loop of price and demand. That a lot of people say, oh, price is the least interesting thing about Bitcoin. Of course, that is bananas. If Bitcoin didn't go up like this, if it didn't follow a number go up trajectory, then we would be wrong about our economics. You would have to go back to your foundation, your foundational assumptions that you have, and rework everything because Bitcoin's not working. But Bitcoin going up, that confirms our other economic claims that we have. So Bitcoin's technology is working as expected. That includes number go up. If number didn't go up, we'd have to reevaluate. So that is why Bitcoin price is all that matters. Okay, now let's get into some of the other stories. We have Fidelity adds Bitcoin to their all-in-one ETFs in Canada. So these are Canadian ETFs, but if this kind of thinking spreads, it's huge. If Bitcoin becomes part of all balanced portfolios, as high as a 3% allocation, that is hundreds of billions of dollars coming into Bitcoin with a multiplier as high as 100x. So we see these are their all-in-ones in Canada. Even their conservative fund has 1% Bitcoin. It says crypto, but it's really Bitcoin. Their balanced is 2%, and their growth ETF, all-in growth ETF, is 3%. And their all-in-one equity ETF, Bitcoin, is also 3%. So that's pretty huge. Fidelity's Bitcoin ETF is already their fourth largest. These numbers are as of Friday. Bitcoin is up almost 6% since then, putting their total assets in the Bitcoin ETF at 3.35 billion. And it's even higher now. We just looked at the chart, so it's probably up 7 or 8% since this. And you can see the Fidelity Wise Origin Bitcoin Fund, FBTC. It jumped over the healthcare ETF that was also 3.1. Bitcoin ETF was 3.1 billion in assets, but Bitcoin has jumped above that up to probably 3.4 billion now, depending on also their flows for today. They could have added another $500 million of inflows as well. So we're getting close. Like the next one up is NASDAQ. Then we have the total bond, and we have this technology ETF with 9 billion. I can see Bitcoin easily surpassing that in a matter of 2 months to become Fidelity's largest ETF. All right. ETF inflows explode higher. This chart is only through Friday because we didn't have the numbers for today, but I expect flows to continue to grow as price rises due to FOMO. Remember, we had that talk last week about which is first, the chicken or the egg, which is first, inflows or price. I think ultimately it's price, and then inflows will follow in a positive feedback loop. So then it gets this Kickstarter where higher price begets higher demand, which begets higher price, and that's kind of what we're seeing here on these flows, just massive flows the last couple of days. And I'm guaranteeing you that the flows today were pretty substantial as well. Okay, so that's the Bitcoin headlines, mostly ETF, right? All right, next for macro, US CPI is coming out tomorrow. I should be live streaming it at 8:30. Of course, I have all of my parental duties and everything in the morning, so I'm going to do my damnedest to get there by 8:30, but it might be 8:35 or 8:40, but I will be live streaming the CPI tomorrow. Current expectations by the Inflation Nowcast is 0.3% month over month. Personally, I always expect an undershoot, but that rate is 1.5% annualized. So if you annualize this, you get 1.5%, which is already pretty low. But I do expect some months to be under zero month over month. Maybe this is the month, maybe next month is the month, but we will most likely in 2024 have at least 2 or 3 months that are negative month over month for the CPI. You can see their chart here from Inflation Nowcast, and I link to it in the source. Okay. Trueflation is a new price CPI-like source gaining in popularity. I've seen a lot of people tweeting this out, and not just in the Bitcoin world, but in the macro world. Danielle DiMartino Booth has been tweeting this out. I think Lance Roberts has been tweeting this out, or his crew have been using Trueflation. But it's an interesting concept. So they do daily instead of monthly, right? And so they do pull all of the stats. I think there's like 10,000 different stats that they pull, and they do this on a daily basis. And this is showing that it's 1.37% year over year. Okay, that's the important thing. It doesn't show you like a month over month because they don't run like that. This is a blockchain project, though, which I didn't know until today when I was going in and looking at their About Us page and looking at their methodology a little bit. It is a blockchain project, and they have their own token. So you have to take this with a grain of salt, but it seems to be a little bit closer to how I'm seeing CPI than the actual CPI or even PCE or anything like that. So this is a very interesting new thing. Maybe this will push the conversation forward. Balaji is one of the investors, as well as Coinbase and other, altcoin related people. Okay. They have a shitcoin, so they do have a token, but I think it's closer to the mark than CPI due to the methodology around housing. So the housing for CPI has been the thing that's been keeping it higher. And there's so many different ways to measure housing. And it seems like CPI has chosen one of the slowest possible ways to measure it. Maybe their idea is to take volatility out, but it just lags by so much. I mean, it could be 1 to 2 years lag on the housing component in CPI. And by then, you're either way out of recession or you're way into recession. And it's just, it doesn't really get those quick turnarounds in economic activity. So anyway, this is interesting. Trueflation. Check it out. Okay, next macro headline. EU bends the knee to farmers, and they drop key provisions in the 2040 climate proposal. Quoting from this is Zero Hedge. Yeah. According to the EU's executive's plan, all sectors need to now contribute to the effort, but the previously mandated 30% cut to agricultural production by 2040 is gone. The revised draft has also excluded a mandate for citizens to make lifestyle changes, such as eating less meat, and a push to end fossil fuel subsidies, Politico reports. The globalists, they don't have any defense against these types of protests. They don't. Everywhere these protests have been tried, they've won. They won. The Canadian truckers, even though they took down some individuals, freezing the bank accounts, seizing bank accounts, even though some individuals lost that battle, are still in that battle. They won the concessions that they wanted, So they won in the Netherlands. Now they won in the EU. Everywhere these things are tried, it wins. So I think this is very interesting. They do not have an answer for this. They do not. It's amazing. I love it. Okay. Germany's days as an industrial superpower are coming to an end. And I have been talking about this for a long time. It seems like things are just slotting into place. I remember talking to CK on FedWatch back probably in 2021. And I'm saying, look, we're going to come out of this. The US is going to be okay. They probably have recession, throughout this period, but the US will be okay. China is going to fall apart, and the EU is going to be hurt dramatically. And that's exactly what we've seen. I mean, if you would have just traded those calls, short China, short the EU, and long the US, you would be sitting pretty. Okay, let's see what this, I think this was a Bloomberg. I archived the link, but I think it was originally a Bloomberg piece. Oh yeah, Bloomberg right here. Amid the flickering of flares and torches, many of the 1,600 people losing their jobs stood stone-faced as the glowing metal of the plant's last product, a steel pipe, was smoothed to a perfect cylinder on a rolling mill. The ceremony ended a 124-year run that began in the heyday of German industrialization and weathered 2 world wars, but couldn't survive the aftermath of the energy crisis. That's not exactly true. Um, it shows what a big deal this is, right? 124 years through 2 world wars, but the Green Party got to them. The globalists finally destroyed industry in Germany. That's what they want. They want to destroy everything. And they've finally done it. It's not the energy crisis. The energy crisis is a result of crappy policies, right? Okay, manufacturing output in Europe's biggest economy has been trending downward since 2017. So this is not a COVID thing. It is not necessarily even a response to COVID or this energy crisis right now. This has been going on since 2017 because of the globalist policies. And the decline is accelerating as competitiveness erodes. Quote, "We are no longer competitive," says Finance Minister Christian Lindner. So I thought this is interesting. I've heard of this guy before, obviously, the finance minister over there in Germany, but no relation that I know of. Said at a Bloomberg event earlier this month, quote, "We are getting poorer because we have no growth. We are falling behind." And this is a chart from Mish Shedlock. He is a no coiner or a never coiner even. But this was an interesting chart. So you see November of 2017 at the top here. That is the peak industrial production, and it has been pretty much straight down ever since. I mean, they are still at their 2017 levels. It looks like, pre-GFC levels, but there's nothing stopping it. Okay, they're just going to continue to deteriorate. All right, so that was that. That was all the macro headlines. Let's get into price. That's why we're all here. Price is the only thing that matters. All right, so we are so back, baby. Last week, price was playing with the 50-day moving average. This week, rocket. So let's take a look at this chart. I just highlighted last report, and I was kind of I wasn't necessarily non-committal, but my language was when it goes up. Once we break out of this range, we will break out of this range. It's just a matter of when, right? And so I just took a quote from there. Once we break upward, there's little to stop a rally, and we have just continued to rocket through this area. All right. There's no sign of a slowing of demand at this point. Everything I'm seeing is extremely bullish and pointing in one direction, which makes me a little worried, actually. Always be prepared for the unexpected. And I don't know why I wrote this today, but it kind of hit me as I was looking at the price, as I was thinking about all the fundamentals, thinking about all the price, even on the, technical analysis. There's nothing to stop this price until we get to 57 to 58,000. And even then, it's just a volume resistance. It's not really anything like a Fibonacci or any real important level at all. It just happens to be where there was a lot of volume back in 2021 or whatever. So price could just scream all the way to all-time highs right now within this week, which would be insane. But it was so bullish, and I was so bullish just considering all the different fundamentals. I was like, okay, maybe there's something wrong here. We're not seeing this, because when you start feeling that up is the only direction, we're probably going to get taken here on a wild ride. So just be prepared for the unexpected. There can always be an exchange hack. I've lived through many exchange hacks. I've lost Bitcoin in exchange hacks. So they can come out of nowhere. And especially when the market is starting a bull market or starting to get bullish, back in the day, maybe when they were less professionally ran, people would not, they're starting to get giddy, and they're not going to maybe follow all of their checks, their security procedures and protocols. So an exchange hack could happen in a period like this. Also, there could be a regulatory announcement. Maybe some governments want to pour some cold water on this. I don't think we necessarily will see this out of the United States. It's possible, but I wouldn't put it past the EU either. The EU is anti-Bitcoin way worse than the US is. So I could see some sort of big regulatory announcement, crackdown effort that they're going to try, and that could put cold water on this, or something else. Don't be overinvested. I think that's a good point as well. Yes, we want to have a large exposure to Bitcoin, obviously, but if you get worried, especially for new people, let's say you just found Bitcoin in 2023 when it's going up, and you've doubled your money now, but that's a lot of money for you and your family. Okay. And now it's like 90% of your net worth or 50% of your net worth. And it's just too much for you to sleep at night. Everybody is different. And everybody has different needs. Perhaps you have different expenses in your life than other people, and they can hold for 5 years, where you might have expenses come up, heaven forbid, a sick child, or you have something that happens in your life that you don't want to be overinvested. So that's a personal decision for everybody. But especially at a time like this, I don't know, it's always good to think about this. If you ever are getting kind of giddy, or you get some sort of bad feeling out there, it's probably because you're overinvested, and that hurts the rest of your stack as well. So let's say you are invested in Bitcoin and you're a whole coiner now, and maybe you're a young guy, you're a whole coiner. That's a lot of money for you. It's probably your whole net worth at that point. And you don't want to panic later and sell all your Bitcoin. You sell your whole Bitcoin. But if you eased it out, so yeah, you're a whole coiner, maybe you can sell just a little bit so that it reduces your exposure. I don't know exactly, but everybody's situation is different. I just want you to be aware of this type of stuff. Don't be overinvested. I might be the only Bitcoin focused analyst, blah, 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 to say that. But you can be overinvested in Bitcoin if the prospect of a 25 to 50% dip causes you major stress. Never get 100%. Never. Oh my God, guys, my typos are terrible. Never get out 100%. That's what I'm trying to say here. I'm just talking about being 100% in Bitcoin and getting your house or your kids or your lunch money. Oh my God, this is horrible typos. Be mentally and strategically prepared for a dip. So yeah, you don't want to mortgage your house and then Bitcoin dips 50% and now your kids don't have a roof over their head, right? So again, you can be overinvested. Just be careful out there, especially when everything looks perfectly lined for a big bullish run. I think we will have a bullish run now, but there's always that little bit of risk. So don't be overinvested. Okay. And especially don't ape in more. Let's say you thought, oh, I didn't stack enough in the bear market. I'm going to mortgage my house right now and stack at 50,000. And then it drops to 40,000 and stays there for a year. Like it could bring up major financial problems. So I think I beat that dead horse. Okay. That being said, I don't expect a dip here. I think the ETFs were not nearly priced in. So we have a long way to go for that. So a lot of people talk about priced in, if you can price things in the future. We could price in the psychological effect of a approval and launch, but you can't price in actual flows. I mean, some people did in the futures market, they bought Bitcoin futures in anticipation, and that could push price up. Those are cash settle futures. So there's not a 1-to-1 ratio of buying a future and pricing it in the spot market. But I think there was some pricing in of the Bitcoin ETFs, but they can't price in all of these flows. So prior to the launch, I estimated that high 50Ks were fair for the launch, and we didn't get there, right? We only got to like 48 or 40, was it 49 on the day of launch? Um, but the flows cannot be priced in. And here is my little diagram of all the flows. So this is Grayscale here, the second to the right. And you can see the heat map here is most of their outflows happened back here in January. Around the 22nd was the biggest day. Those were all their big outflows, and they have been trailing off. And then total flows, you can see those also corresponded. The big days for GBTC were red here, but we've been getting green, progressively more green. So that is the flow situation. All right, net flows as of Friday were 2.6 billion, which should correspond to 260 billion gain in market cap at a 100x multiplier. And where am I getting that 100x multiplier? I've covered this before. There was a study by Bank of America, and they looked at it was like $93 to move the market cap 1%. And at the time, Bitcoin's market cap was over $1 trillion. And so like 93 million works out to being it was a 118x multiplier. So I'm just slightly more conservative of that at 100x multiplier. But at 2 billion in flows, we should have 200 billion in gains to the market cap. And we don't see that. That would have brought us to 1.175 trillion for the market cap. Or that works out to 59,800 per coin with the current circulating supply. So that's what, if all these flows would have been priced in, we would be right now at 59,000, but we're not. If we rapidly make up that difference, it would fit with my warning over the last several weeks. Expect a brief, steep appreciation followed by periods of calm. All right, so let's take a look at these inflows. Okay, this is market cap. And you can see at the time of writing, it was only a 7% gain from the ETF launch, even though it's 2.6 billion of inflows. It should have been way up here. So that's with a 100x multiplier. And remember, that's net flows. This is net, not excluding GBTC. That's including all the GBTC outflows. All right, so that's it for price. And actually, let's go take a look at the price chart again real quick. Where are we at? Okay, we're back under 50,000 here. 49,875. All right. We'll probably be breaking up again tomorrow. We'll have to see what the flows were. Let's get into Bitcoin mining. So, U.S. mining giant looking at Africa amid expansion efforts. I think this is a very interesting article, and it's through Blockworks. Okay. I'm hard on Africa because they have horrible geography for economic development. If you guys are longtime listeners, you'll know that I'm bearish on Africa, mainly because of geopolitics. It's very expensive to develop over there, build infrastructure, maintain infrastructure, where you can take that money and you can build infrastructure in the United States or in Europe, and it would go much further. So it'd be much more profitable. So that's why I'm bearish on Africa as a whole. However, this is interesting that they're thinking about doing Bitcoin mining there. However, Bitcoin mining can leverage the internet and Bitcoin's unique ability to equalize transportation costs. One of the things about Africa is they have crap rivers and ports. Their best port, I believe, is it's either I think it's Johannesburg down in South Africa, and it barely does any traffic, and it's like their biggest and best port. There's lots of parts of Africa where the ships have to actually dock like a mile offshore, and then they get smaller boats to come in and take it the rest of the way. They anchor offshore. Their rivers are crap. They don't have navigable rivers for the most part. The ones that are navigable, we're talking Nile in North Africa, but sub-Saharan Africa, you have very limited navigable waterways. So economic development just can't happen. And a lot of the places as well, like there's some stat that Thomas Sowell had that in the last like 500 miles of I think it was the Amazon, 500 miles of the Amazon River, to the ocean, that it only drops like 200 feet or something in elevation. And the 500 miles for any river in Africa, it's like 2,000 feet. So there's rapids, there's, you can't, it's just not navigable for large boats. So anyway, that's why I'm bearish on Africa for the most part, plus deglobalization. And, Africa is built up by a lot of outside foreign direct investment. Well, what if that doesn't happen? They're dependent on fertilizer too. They're dependent on international supply chains. And if those break down, Africa is not going to be doing very well. But Bitcoin is different because all you need is internet connection, miners, of course, you need the rigs, but then you need electricity. And, there's plenty of ways to get power in Africa. They have, since they do have rapids, they can build hydro plants. Nigeria has a lot of oil. There's lots of natural resources in Africa that you can create energy with. So Bitcoin mining is kind of a unique industry that could help Africa. But anyway, this story goes into that a little bit. I link the bullet point here. You guys can check that out. Ethiopia has seen an increased flow of miners recently as companies in the segment search for low-cost energy and ideal climate. It has become home to Chinese companies, for example, who were forced out of operating in their home country following a Bitcoin mining ban in 2021. Certain African countries have stranded or underutilized power, Schumacher told Blockworks. Another thing, though, like Ethiopia is a big destination, apparently, and they are, first off, they're not a very stable government. They have a lot of civil wars and stuff, and they are in tense relations with Egypt over the Nile headwaters. So, yes, Ethiopia is a good place, but it also has its risks, right? Okay, if we can attach Bitcoin miners to these power sources, then we can increase the profitability of those power sources and ensure they stay online for the people who need them. Not necessarily, what if there's a war and they're blown up? Across the continent, there is also a need for more power, Schumacher added. Bitcoin miners can incentivize the build out of more power across the continent by serving as the first customer for new power projects. Okay, interesting. I don't believe that this is a sure thing for the whole continent or anything. Most of Africa will suffer in coming years, but places like Ethiopia, if they can maintain peace, and Nigeria, if they can manage their tribal disputes, can do quite well. All right, next story from the mining segment. Georgia lawmakers, environmentalists blast tax breaks to expand Bitcoin mining in state. Now, I thought this was an interesting article, and I think I have it pulled up. Let me go here. Was that it? Nope. Was that it? Nope. Nope. Okay, I have to just bring it up then here through the link. So this is from the Georgia Recorder, and they talk about how they're trying to go through and have Bitcoin mining friendly regulations. A proposal designed to boost the already thriving Bitcoin mining industry in Georgia has crashed into concerns over the noise created by local Bitcoin mining operations and the drain on electricity and water resources. This is some of the criticisms here. Quote, we built 2 reactors. Oh, wait, that's not it. Okay, Houston. This is Penny Houston in just a state representative in Georgia, said a Bitcoin mining operation in her rural district had subjected longtime residents to noise that she heard firsthand and called absolutely atrocious. At a committee meeting held Thursday, she also pointed out more than once that China had recently banned Bitcoin trading and mining. So notice when they want to say banned Bitcoin, they use the term Bitcoin instead of crypto. And here they use crypto when it's a neutral or positive term. But when it's accompanied with the bad term, it's always Bitcoin. Quote, I've always come to the conclusion that if it wasn't good enough for China, it's not good enough for Cook County. I mean, this is the type of stuff you're seeing at the local level, or not, I guess, state level, but you're probably seeing similar type of ignorance at the local level. Some of the lawmakers were still grappling with the basics of what the Bitcoin industry is mining. At these local warehouses or large containers, where computer servers are constantly running to process the transactions. That's the level of the understanding. I'm still confused about what we're mining, said Representative Dale Washburn of Macon. I have rock quarries in my district, and they find the granite under the ground, and they get permitted, and we can all ride by and watch what they're doing. So they don't even understand what's going on with Bitcoin mining. Anyway, this is an interesting article. It's pretty long. You guys can go in here and read it. Let's go back to the report. This was another section here. The division has done over 20 investigations, some state agency, on staking and crypto mine investment programs. So this is probably cloud mining, staking, and cloud mining. That's what I'm interpreting this as. So cloud mining might be Bitcoin, but it's still a scam-ridden type of business, right? We learned early on in Bitcoin, never invest in cloud mining. It's a Ponzi scheme. They're almost all Ponzi schemes. But staking has nothing to do with Bitcoin and has nothing to do with this legislation. It has nothing to do with Bitcoin mining at all. But these 20 investigations, they found that 16,000 Georgia investors lost more than 160 million in these things that don't involve Bitcoin or Bitcoin mining. And that's what they're using, these local people. That's like something that happened 8 to 10 years ago, that this cloud mining was a major scam. And they haven't passed that. It took them 10 years to do a couple studies. And now they're still on this whole thing. I mean, if they want to illegal, the laws are on the books. Like, fraud is illegal. That's what all these things are. They're fraud. But Bitcoin isn't. Bitcoin mining isn't. If it was a fraud, you wouldn't need to have all these computers using so much electricity and doing all this stuff. That's a way to know that it's not fraudulent. Anyway, that's that. Next headline, 2024 halving. This time is actually different. So this is a long article by Grayscale, or blog post. And I gave you a TLDR that ordinals will help miners not go broke through increased fees, by increasing fees. And the ETF flows promise to boost the price. So that's the whole, it's like a, 15-minute read, 20-minute read to get that TLDR. I thought it was comprehensive, so I wanted to share it. But I disagree with the ordinal part, that they'll be a major player in the future. But that's right up Grayscale's alley. They probably want to pump ordinals, pump shit coins. That's what they like to do. Okay. Difficulty and hash rate. Hash rate continues to scream higher. Difficulty adjusted plus 7% 2 weeks ago and is estimated to adjust up again by 9% in 2 days. So here is the chart. Pink line is difficulty. The volatile line is the measured hash rate. The slow moving yellow line is a moving average, probably a 7-day moving average of hash rate. But you can see it is going up. Healthy, very, very healthy what's going on in hash rate and difficulty. Mempool has come down dramatically over the last week, currently only 206 megabytes, the lowest since 7 November. All right, let's go into this one. You can see on the right-hand side, chewed through all of those transactions. Now we're chewing into this dark green section. Each layer of the cake here is a different zone or range of fees. The cheapest fees are at the bottom, so they get left till the end. Higher fees are up top, so they get confirmed sooner, right? And so the miners will chew through from the top down, and that's what we're seeing here. All right. Inscriptions. The shrinking mempool matches with the decline in inscription volume. The dark brown line, that's the moving average on this chart, continues to decline. The last week has been very low. Yesterday only saw 79,000 inscriptions. So we can see the last week down here has been very low. The normal spikes that happened on the weekends here, those are nowhere to be seen. And the moving average of number of inscriptions each day continues to fall. All right. And then we have the fees paid by inscriptions, and they logically also have fallen. To date, there is still no organic market for ordinals or other inscriptions. And it's very interesting when you think about the altcoin side of the house, for the NFTs and all that. I think there probably was some organic demand there because it actually got out. It was kind of a social phenomenon, but it wasn't as big as what people say. A lot of that demand was for money laundering and stuff like that. But the fact that you could you could trade them on chains, mint them, trade them on chains where the fees were relatively low. I think that helped the Ponzi go for a long time. But with Bitcoin, you actually have to pay for the Ponzi, and the Ponzi just cannot sustain these levels of fees that have to be maintained. It bleeds out too much, and the Ponzi doesn't, build up steam. So 30 million at the height here. I think it was like 33 million or something, 31 $1 million were spent in 1 week on fees for these things. And I think that kind of broke the whole system. That poked the Ponzi bubble, right? Okay. Last section here, layer 2. Bitcoin needs layer 2 networks more than Ethereum does. Merlin. Okay, so Merlin chain, I guess that's an altcoin, and that's their founder said that. Shitcoiners are coming to Bitcoin layer 2s. It is very true that Bitcoin needs a scaling solution, but there are several to choose from already. We don't need all of these other layer 2 Ponzi schemes on top of Bitcoin. The demand has to come first. So right now we have all of these different solutions. There are several to choose from. Fedimint, Liquid, Lightning. Those are the main ones. Drawing a blank on other layer 2 options. Drive chains are an idea. I don't think they'll ever get passed, but we have things like what is that other one called? It's not Stacks. Is that Stacks? Rootstock is one. They're ported Ethereum over to a Bitcoin. And so there's options out there. The problem is there's just no demand. So demand has to come first. We just talked about Lightning and how they lost 3% of capacity and 3% of channels over the last week. There's just no demand out there. And a lot of people say, they say, oh, we need to spend Bitcoin. Okay, that's fine. I agree. If you guys are listening to this and you think that spending Bitcoin is an important thing, that's fine. You're following your incentives to do so. but I don't think it's that way. The market obviously doesn't think it's that way. Lightning Network, which is the main spending layer for Bitcoin, just lost 3% of its capacity, and the price is mooning. So, no, the first thing that has to come is global adoption in the deep reservoirs of money. That's what has to come first. The big money has to adopt it, and the big pools of capital have to include Bitcoin. And then Bitcoin is going to be demanded on a different level, a deep fundamental level of the economy, and that's going to trickle up to regular everyday transactions. Okay, so that's the way Bitcoin is going to move through into the spending. I don't think Bitcoin is going to be adopted for spending because two guys asked the shop owner if they would accept Bitcoin. Okay, I've been here so long that it seems like there's still this certain segment of Bitcoiners out there that really push spending, and it's really not that important. In El Salvador, the good thing about El Salvador adopting Bitcoin is the state adopting Bitcoin and big capitalists in the country adopting Bitcoin. The rich folks. It's not the little shops that sell coconuts. Those don't really matter for adoption of Bitcoin. Adoption of Bitcoin is not going to be a bottom up. It's going to be from the rich folks adopting it first and then, trickling down. All right, at least for savings and then transactions, and then everyone was going to use it. Okay, so just watch out for these people, the layer 2 people, the altcoiners, the scammers, the Ponzi pump and dumpers. They are coming to Bitcoin and they're going to be offering layer 2s. We need to be aware of that. All right, so that's it for the report. Let me check the comments here. I got to exit full screen. Let's see who we got in the chat. Jerian, onward. Dex Invictus, always with us. What's up, peeps? Okay. Looks like Anime has a question here. So what is the odds of Adam Back being right about his 100K call before the halving? 100K before the halving. I think it's possible. I think an all-time high before the halving is much more likely. I mean, I think it's the most likely outcome that we get all-time high before the halving. 100K is a little bit far, in my opinion, but it's possible as well. Just I would put it lower, like 10, 20% likely. Okay. Let's see. Extremely Peaceful says, hey, Ansel, I see discussion online from those opposed to BTC that all price gains coincide with Tether supply increases. Essentially, they are saying Tether prints out of thin air and then buys BTC. Tether is over collateralized. They don't print out of thin air. People deposit dollars and they get issued Tether. This is very well known now. Tether's balance sheet, they make so much money off of their investments, because they have treasuries and their reserves aren't all in dollars. They diversify into other things and they make money off of that, the backing of Tether. So they make so much money, billions of dollars a year, that they buy Bitcoin with it, and Bitcoin goes up. So they are way over collateralized. I bet their balance sheet is at least 25% over collateralized. So they don't print out of thin air. That's complete garbage. And the reason why that it coincides with the Tether supply coincides with Bitcoin increase is because price increase pushes FOMO, and people will then get Tether to go in and buy Bitcoin, leverage up on the Bitcoin exchanges, things of that nature. So the price comes first, the price move comes first, and then the Tether printing comes after that. But it's 100% backed, over collateralized. Can you shed light on the legitimacy of this argument given your understanding of the space? Okay, did that. So these critics have a fundamental misunderstanding of where Tether tokens come from. Yes. And they can short Tether. They can short the peg. I mean, it's just not going to, they're not going to, first off, they're not going to put skin in the game. And we've heard this Tether FUD over and over and over again. I think the FUD originally started from Circle. I think Jeremy Allaire knew that he was going to launch USDC, and he's kind of a scammer. You know, he's kind of just a dirty player. And he ran Circle a long time ago. Then he rage quit Bitcoin, probably like 2015. I want to, or maybe, I can't remember now what year it was, but he rage quit and he said, Bitcoin's not going to be used within 10 years. It's going to zero and all this stuff. And then he had to bend the knee and come back years later with USDC. And I think he had planned to do it, launch USDC for a couple years or something, but they had this whole scheme to FUD on Tether because Tether was pretty much had no competition. They were the de facto monopoly at the time. And so they were FUDing Tether. I think that's where all of the FUD came from, was from those types. Yes, Dex Evictus, Tether FUD. It's the same FUD we've heard for years. And it's, I also notice that there's a lot of overlap between Tether FUDsters and gold bug conspiracy people, you know, that believe that the silver and gold markets are 100% manipulated and they just get smashed. And every Monday they come in and smash naked shorts on silver and crush, you know, the people that believe in that type of stuff, instead of just silver is being demonetized. It's an industrial metal now. We shouldn't expect it to go up in value necessarily. And for gold, it is also being demonetized. Bitcoin is stealing its thunder. And also, from just a basic economics understanding, I was in the inflationista camp for a long time. But the inflationista camp cannot explain what's going on with gold. For years, they couldn't. The only thing they could explain it with was corruption and manipulation, instead of understanding, like having a questioning your assumptions and having a deeper understanding of what's actually going on. They just blame the fact that gold has, I just tweeted out a response to Peter Schiff. And, you know, he's talking about this most recent rally in the Bitcoin price. Since 2011's all-time high for gold, gold is only up 5%. It's not even keeping up with CPI by a lot. Like you would have lost purchasing power if you bought back in 2011 at the all-time high back then. So, yeah, they can't explain why that is unless it's manipulation. But of course, the real answer is that we are in an overwhelming deflationary era at the end of a credit bubble. And if there is money printing, if there is an increase in government debt, if there is all this intervention, all it's doing is stemming the tide of deflation. But you can't solve a debt problem with more debt, especially more bad debt or unproductive debt. All it's doing is making the bubble bigger, but it's not making the bubble sustainable so where it can go off on its own, where it can grow on its own. The overriding pressure is a deflationary bust. That is what we're facing right now. So yeah, all of that to say, I notice a lot of overlap between Tether FUD and gold manipulation FUD. I obviously know very little about Tether. Okay. I don't know very much about Tether other than what I've absorbed over the years. I've looked into, I'll share this on the screen here. It's tether.to, I think. Whoa. I typed that wrong. Okay, so here is tether.to, and we can go to the transparency page, and we can take a look at this. 96 billion Wow. Yeah, Tether is going crazy. Um, but we can look at all their backing of stuff. Where's their assets? Uh, 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 uh. Where is it? Where is it? Where is it? This just says like what platform they're on. So on Tron is 51 billion, Ethereum 44 billion, Solana 1.8 billion. But I can't. There's somewhere on this site that you can find their balance sheet, but I can't find it right now. But you guys can go check that out. I have a hard stop here in about 5 minutes. Let me see more comments. It's basically the thesis of our Buttcoin. Oh yeah, good old our Buttcoin. Shifty Pete. Yeah. Okay, let's take a look at Telegram here. If you guys have any comments. iBit had 850 million in volume today. Okay, but that's not inflows, right? Massive volume day. Yes. So that's trade volume. They're over the large gold ETF. Okay. Yeah, that's important. Well, is gold, I don't know who runs that, but Van Eck has a big gold ETF. I think they run GDX, or is it GLD? I can't remember. They run one of the big gold funds. Chinese New Year part of this pump? Facey McFace asks on Telegram. I do think so. Yes. That has been brought up by several people now, and I wrote about it on Substack for Bitcoin Magazine Pro, that their stock market collapse, ran across an article on Reuters that was talking to industry experts over there in Hong Kong and some guy on mainland China, that was saying that, yes, Bitcoin is becoming very popular over here. There's not a day goes by that we don't see massive interest. And yeah, I think this is part of that story for sure. Okay. That's where I'm going to have to end it today, guys. Thanks for joining me. Check out bitcoinandmarkets.com, also bmpro.substack.com, and I'll see you guys on